In today's video, we're going to talk about Apple again, and we're going to talk about why you need to take this work from one decision to the next. Now, if you remember, the original trade setup on Apple on the weekly chart is a big old two-step pattern. Okay, so we have the zigzag, we have a 1272 extension of a prior swing, a 100% projection of another, and a 382 retracement at this last low. Now we hit the zone, we held above the zone, and since then there have been buy triggers against it. Okay, now the potential is very healthy if we continue to hold above here. We would look for either a rally towards this important resistance, the 234 area, and then the 239, 241 area. And if it plays out fully as a two-step pattern, again, 274.16 is going to be target number one. But what else do you have to look at? Well, let's take a look at the daily chart, because we do have to take this work from one decision to the next. Even though the weekly chart looks like it has some great potential, there are some things that you need to look at on the daily. And that is the fact that price is underneath the 200 simple moving average. It's underneath the 50 simple moving average, and the 513 EMA combo is still in a sell mode. So what does this mean? We have to be prepared for a possible failure. This is the next decision. We're up against it right here, right now. It comes in at the 221.01 to 223.38 area. It includes a 382 retracement, 3 symmetrical projections, and a 1618 extension. And that's possible resistance. Now, if we can clear it, great. Then we can at least look for a deeper upside correction. But if we fail to, we do have to be prepared for a possible failure. So what does that mean? It just means that you need to ratchet up your stops if you are trading Apple. And you also have to remember that different time frames give you different setups, and you have to choose the time frame that you're trading. So for example, if you look at the 30-minute chart, well, the 30-minute chart actually looks good. On the 30-minute charts or the intraday charts, I use the 834 EMA combo, and I look and see if the 8 is above the 34, then that's bullish, and I think we should be looking at pullbacks on this time frame. But remember, different time frames. Weekly chart gives us a buy setup. Daily chart gives us resistance and a sell setup, but the 30-minute chart looks like we'll have to set up the pullbacks for new buy entries. Which one of these do you trade? That's a question that you need to ask yourself. If you're shorter term oriented, then look at the 30-minute chart, the higher highs and higher lows, and we'll set up a new buy entry. Okay. But if you're looking at the daily chart, you're going to have to consider this for a possible short. So that's why I'm always saying, take it from one decision to the next. We are rallying nicely from this support, but we're up at resistance right here, right now. And if we can't clear it, be prepared to get out of the way. Hope that helps.